Well, Nikki, it's been a very exciting year for Vodafone with its Verizon wireless deal just going through, but today it was back down to the regular humdrum business of quarterly numbers. What are the latest results from Vodafone telling us?
I think humdrum's a bit of a kind description. It's a very weak market in Europe. The rest of the business, 1/3 of the revenues that come from outside Europe, broadly speaking, still look pretty good. Europe is as difficult as it ever was on the first half numbers, and Spain in particular was weaker than people expected. So revenues are down, and there's still regulatory pressure from roaming cuts and mobile termination rate cuts as well. So that's really not very cheerful. That said, the company itself, well, at least it says it sees a turn approaching, and pushed for a little more detail. It seems to suggest that in the next year or two, things could look a bit better.
Well, we also heard from Vodafone that it's got some new spending plans, perhaps with this better environment on the way. What's it done to its spending?
This is so-called Project Spring, which it was an investment plan that already existed. Broadly speaking, it's sort of enhancing it. It's now going to spend 7 billion over 2 years rather than 6 billion over 3 years. That seems like a very sensible move if you really think that Europe is starting to mend and all the economic trends suggest that we have at least reached a floor here, and that some of the regulatory pressure is going to ease off a bit. You want to be well placed to take advantage of it. There's obvious demand for data services, and a bit of investment in networks is a good idea. Vodafone is also sort of trying to move quite aggressively on the enterprise side, so some of the money will go to help that. It all looks a very sensible response. There'll be a short-term impact, though, in terms of earnings. OPEX will go up, will be higher than it was previously thought it would be. And it becomes neutral in terms of earnings before EBITDA, earnings before interest, tax, depreciation, amortisation, in 2016-17.
So how does this change the investment outlook for Vodafone and its shares? If it's tough at the moment but improving and it's spending money into that improvement, does the future look bright?
I think the future looks better, and I mean it's managing its way through what for everyone in this sector has been a very difficult 4 or 5 years. The thing about Vodafone is I think quite a lot of people in the market wonder whether it will be there as an independent company. In 2 or 3 years' time, there has been talk, obviously, of AT&T's interest. The company, rather interestingly, put some tax assets onto its balance sheet to the tune of, well, 18 billion, which is a lot of money even in the context of Vodafone, which sort of led to some speculation in early analyst notes to sort of, would this be seen as a sort of hint as to what the right price for Vodafone is. Now, the company says it was a change required by accounting rules. But the market speculation is obviously out there.
Well, the deal making and M&A rumours around Vodafone are obviously going to continue for some time to come, even as the company itself tries to work its way through difficult conditions. Nikki, thank you very much.